Good morning for October 27th, 2022, Thursday. It's 7:26 a.m. Eastern Time, and here to do a review of the trading stories that were laid out for the ES yesterday morning, right around the open. In the video, I talked about this 50 moving average. By the way, this is a regular trading hours daily chart, and this was Thursday. Thursday's already printed. Obviously, it's the next day. I didn't do this late afternoon or last night. But this bar right here was Wednesday, and in the pre-market, I was talking about doing the or this 50 moving average that we came to, and then in the overnight backed off. And this was being a critical inflection point. If we got above it, that we might the next destination might be this 100 moving average, which is the white dotted line. Even possibly this being a corrective zigzag from this down move in the daily bars, that we might even get to 100%, which is 39.30, which is just above the 100 moving average. Well, we didn't. We almost made it to the 100 moving average yesterday, but there were conflicting data points. One, this being a weak high, and a weak high is one that at some point it's likely to be traded back through, and it's not known exactly when. And then we also had a weak low for reasons I can show you on the profile. We had conflicting data. You know, we are one time framing up. It's 3 days of bars up. And we've got the 20 moving average turning up, an upwards trend, but the longer term, 50 and the 100, pointing downward trend. So I have a lot of conflicting data points here. We also had a poor low in the overnight from well, I have to look at the thing on 10:23, and I don't want to say incorrectly, but I'll tell you the reason. I'll pull the stories in here, the little card I make. I can get rid of the daily chart for the moment. I wrote poor low in the overnight, and I want to explain why. I was looking at this profile chart when I made that, apparently, and this was the excuse me, I have these little buttons to keep things on top, and then sometimes they hide things I'm looking for. So right here is a poor low, but this is in halves. See, it's like 38.37 even, 38.37.50, because there wasn't very much excess. So I have a chart like this to help be able to look at a more bird's eye view, because the profiles get so long. They're so elongated, and I've repeatedly say this because in years past they did not used to look like this in the ES. In other markets, like the NQ in particular, they would be elongated, and you had to scroll or zoom out to see the full day, and you can lose the context, So I made a chart where a lot of times I even keep this in ones, just like that. I can shrink it down pretty good without the letters going blurry, and I keep this around, and it happened to be on the screen, and that's where I got that from, because we did not have on this chart, on the main, every letter is one tick profile chart. Now the scale says in halves, but every letter is at a tick. So and again, this is for future reference. Okay, so I can be right in between, and there's still a letter right there, right? It's at, like, for example, this is 38.66.75, and you can see on the scale there's print above it. But anyway, I just want to let you to know that that every letter equals a tick, and then a poor low. And maybe this is unnecessary for me to go on about this, but somebody might say, well, there was not two poor lows. There was one back here that I identified, right? There's one back here on 10:20, 10:24. Wait a minute. Yeah, it was. See, I wrote that down wrong. It's 10:24. Okay, sorry about that. I don't mean to go off on tangents. It's just I like to be thorough. Anyway, we've got 3 ticks of excess down here, and that might give somebody cognitive dissonance, but that's the reasoning and why that is. Now, I will say that I do watch this sometimes, and sometimes I've made trading decisions off of it, because just like some people only trade nothing less than a 30-minute chart, nothing less than a 4-hour chart, such like. I believe that there are traders that look at charts in ones or in different scale increments and make their judgments off of that, because it does sometimes change where you believe the value area low is and the low, or what kind of low it is, or the anomaly. Those kinds of things do manifest differently in when it's in a different scale, and sometimes that's helped me. And to give you an example of this is when I had this weekly chart, this composite weekly. Right here, there's probably a lot of ticks, and like this ABA is not all even right here. But you know that this area is probably going to, if it ticks down, if it doesn't go, it's going to pop back in, because this is sort of rejection area. It's excess, if you will. And but on like the individual profiles of the day, there's maybe it's a little more jagged than that. Anyway, you'd have to try it for yourself, but it slows down the price action, and you can also gather some useful information just by looking at it, the different structure. All right, all that being said, I'm going to move on now back to what we're here for, and that's to review the stories. So, let's see here. Move this out of the way and bring in the storyboard. Okay, for the sake of time, I actually kind of want to bleep out that whole bit about the that explanation, but I'm not going to for the sake of time, and I haven't been feeling good, and it just is going to sap my energy. All right, so the first story was to open in range in value and not be able to develop value lower. And the strategy was if we didn't see the buying tail in the prior day's A period being taken back, right? If we were rejected from there, or the market, if we couldn't get down to the overnight low, we'd need to look to be long for a move to the value area high. And this didn't say, coming back into the value area, but it kind of goes without saying. I talk about the value area and the 80% thing a lot, and also prairie dogging things, and it goes without saying. And this story 1 and story 3, as I've said before, a lot of these stories tend to have a little bit of bleed through. Okay, so we want to see developing value above value area low. Now let's take a look at that. When I was still making the video, because I talked about it in the video, we opened right here at 38.37 quarter, where the red letter A is. We came down and came up and then came down, as evidenced by the record on the 1 minute chart, which is not where I want it to be. I'm going to pull back to yesterday, and right here I got rid of the Globex session, so this is the end of Tuesday and this is the beginning of Wednesday. We opened right here, and each bar is being 1 minute. We opened here and came down, came up to about 39, about 40, 39.75 there. Came back down, opened, but then we came outside of the value area low, and that was at 35.5, which is right here. Okay, and came back in. Now, unfortunately, I was still making the video. It wasn't out there when this happened, and I didn't get on board this, but it took off, and I even talked about, hey, we might even make it to the value area high in 2 periods. But that was the idea, and for that, we get a green check mark, because that was a great idea to trade. It was very tradable, and to look into a little more detail, if we look at the B period low, where A period becomes too wide from Wednesday, the low of yesterday, the early morning low, did not even get like below 1 tick. Didn't even take out the low of this. Okay, notwithstanding all the overnight trade in between. Excuse me. So we couldn't get. What didn't happen? We couldn't get to the value area low, and let alone take back even a single tick of this long buying tail in A. Excuse me. So that activated everything, and then we had such a great chance where we came back out and came back in. to, even if you waited till you got back above the open. Now, granted, you're in range in value, and you run the risk of some chop, but that's trading, right? But this trade was beautiful. So it came all the way up to the pivot in the first 3 minutes. So that's up to 50, 70, 50 half. From, if you got in, let's even just say at 38. And let's do this. You waited until it came back through the open, and you got in, and you risked the low. That's a lot more than I maybe like to, I think. Let's see how much stop that is. 3.5 points. Okay, I think that's reasonable for a lot of people, but I would have rather done something like this. I would have rather kind of front run it a little bit, the open, I mean, and got it. Well, I don't know if I would, because that overnight VPOC is right there, and then maybe risk this ledge down here of where it's that many wide. That's still probably pretty big. That's still the same amount. Yeah, I don't know. I guess you could risk, well, you'd risk this low. Once it came back in, you'd just risk the low by that or by a tick. That's more like what I'd really do. So that's 2.5 points, which is more in line with many traders as far as the amount of risk they want to take in the ES. And ask me how I know. Look at the proverbial stop runs. So lately they've gotten a little bigger, but it's usually been about 8 ticks. Now it's sometimes 12 or 16 before it becomes clear that was what the whole game was about. All right, I'm kind of going on a tangent again. So let's look here. If you just took it up to the pivot point in A period, in 3 minutes, that's 14.25 points. Let's write that down. I'm going to write it here because we might have more here available. 14, just round it down to 14. And then we came all the way back down and opened in B, which was an open drive up. Now again, the idea, once you get in here, is you want to see developing value. You want to look for one-time framing and different ways. You want to find a way, whether it's reversions to some moving average on a smaller chart. And here I go again talking about ways to enter this. And by the way, I did not do well yesterday. I didn't follow my plan, and I think it's a function of just I need to kind of recover here health-wise. I've been, it's the weather's changing and all that kind of stuff, and working really hard, and you can kind of get a little bit run down. Anyway, this came all the way up to the value area high in B period, and I had said that. I said we might make it up there in 2 periods, but we really need 3 to be one-time framing. I made that comment because I look back at the overnight, and we weren't one-time once week A came down and took out this X low, we weren't one-time framing anymore, technically speaking. However, were we one-time framing on a lower time frame? I believe we were. And for sake of time, I'm not going to go through that again. I did it in the videos a long time ago, and it's, I think, not something everybody knows to look at, and, you can't give everything away for free. No, I'm just kidding. It's all free, and it's there if somebody wants to kind of review some of that stuff. But anyway, let's see. Buy the truth and sell it not is what it said, And anyway, so we got above the value area high, right? The 80% rule was completed, and beautifully. How many points is that worth? So let's just take this up. Okay, the whole thing would have been 26.75. So that's another 12 points you could add on to this. Okay, 12 plus 24. Now, is somebody going to catch all that? I don't know. Yesterday was pretty good for doing that. The only problem is B period or A period came all the way back down. So it would have been wise to take profit up here and then reload it down here. So that would have even been more, But again, let's keep it simple, and let's say we didn't get 26 points out of this. Let's just say we got, let's say we got 4. Okay, let's just say we got 4 points. 2 points on the way up in A, 2 points on the way up in B. How about that? All right, it's fair enough. All right, and again, I don't like to present represent trading as it's just super easy, and you just are printing money. Some people love to boast, oh, we're printing money. Well, yeah, maybe sometimes you do, but you're also burning it up and giving it back left and right at times too, if you're honest. It's hard. Anyway, and you don't catch every move. And not even if you catch the move, boy, if you catch every tick of that move, you better feel like a champion and enjoy it, because, that might not happen for a while again, And if it happens for you all the time, hey, I'd like to be friends with you. I'd like to learn something from you. So, anyway, we one time framed up and see we had a poor high right on the settlement and close. Now I don't get in. I'm getting off on a tangent on some trade ideas and things, but trading against this value area high would have taken us higher. So anyway, story number 1 checked out. So let's look at story number 2 in range below value. Now the open really isn't going to matter so much right here because we were already open in range at the lower part of value. So it was just a matter of whether we needed to come out and come back in, or we meaning we got rejected from below value, or whether we opened below value and came in because we couldn't stay down there. So let's just take this out for now. Rejected from value area. Volume value clearly lower. This didn't happen. Okay, this is about getting short and going down. Well, this didn't happen. So we're going to X this out. I can tell you right now, I already know. 1, 3, and 5 happened. So let's go to 4. Okay, continuation past prior high of day. I'm sorry. 1, 3, and 4 happened. Continuation below prior low of day. We didn't get down there, so that did not happen. Okay, basically 1 and 3 are a lot the same. And I talk in this one about one time framing higher, but basically it's just where we open is a little different. Look to be long, odds higher if this move is counter directional from early trade, and that was sort of the idea that we really tried for taking back a period and it didn't happen, and then it became counter directional and came back in, But 1 and 3 are sort of together. Really, they kind of. It's more like 1A and 1B, really. All right, now this one is very relevant. Here, let's put a little check mark here. We need positive affirmations, okay? Continuation past prior high of day. Well, we certainly got that. We need to see bars closing above the regular trading hours 50 simple moving average, which is a critical inflection point. If volume distributions appear and closes indicate continuation by weakness, basically by pullbacks, or retracements, however you want to term them. Destination is possibly the regular trading hours 100 simple moving average. Well, they sure made an attempt. It got pretty close, relatively speaking, but didn't quite get there. And let's look at that on the profile. Okay, so we got above. First of all, trading against the value area high. Was very doable for taking it further, right? But that story was more about the prior high day. So let's look at that. Well, I also want to point out, by the way, okay, this is important. Actually, I tried to make this video last night. I was just too tired, and I started it, and then I just scrapped the whole thing after I'd been talking a while. So the 50 moving average, I'm going to put it right here, and I'm going to color it this. It's kind of a purple, because I use purple for a 50, but on my profile chart I use that for the volume point of control, so I got to make it a little different. We're just doing this temporarily. So, excuse me. Okay. I don't know why that's... That's why. Okay, this is our, and I want to show you this. So, one thing that in the video I made early in the morning, that when I made it, I didn't think of it at the time, but what happens is, on your chart probably as well, your chart system, the crosshairs will show you, like, it'll jump to the next slot where the bar will print. And I should have realized that when I was talking about it being up here, you know, the 50-moving average, it actually was down here when the day opened at like 60. Well, actually, this is saying 61.75. So it says 61.75 now. So it was right around there. It might have even been a tick lower, because you can see we came all the way up, and then we came back down to about where we opened when I was talking about this. So it was right in the same exact spot, basically. I mean, more or less by a tick or two. Excuse me. So let's look at this. I talked about bars closing above it. So once we got above this 60, let's just say 61.5, 61.75. Well, interestingly enough, you can see C period came down right to it. So I'm pretty sure that's exactly where it was. Came down right to it, so you could trade against that value area high in 50 moving averages. Very sorry. But you've got, let's see here. Continuation up to the prior high day. You can look on, you know, between here and there, there's plenty of 1 minutes and 5 minute bars or whatever that you could look for closes that closed above. But B period closed above the 50. All right. Then C period closed above the 50 right here, because you can see it closed right here, and then the green letter is where the new bar opens. And we get above the prior high day. And, you know, there's just different ways to get in, but it took it all the way up to the R1 and then rolled over. Now, why did it roll over? I didn't put that in stories. I wish I would have. Actually, a little later in the day, I kind of kicked myself a little bit, because I've always enjoyed, like, I mean, not predicting it, but like starting to think that may happen. You don't know if it's going to happen, but when it does, it's kind of satisfying. It's like, how did I know that was going to happen? But you start to get a feel for it, and I thought it might roll over and take out the low, because we had a, well, I believe at the time, poor low in the overnight. We had a poor low the day before. We had a weak low the day before because it opened on this VPOC. They never took out the overnight low. Same thing with the early morning here. And it was the open was right on the VPOC to the TPOC, VPOC of the overnight. So I just consider that an area where we're probably going to come back through in the near future, maybe the same day. And based on who seemed to be in control, it made a lot of sense that it rolled back over. Now, I'm sure a lot of people were still trying to get long, but at some point we stopped one-time framing. So now I'm going, let me bring these back in here for a second. Let's talk about this. Continuation, you know, this worked. Let's just get this out of the way, okay? So I'm tying this with number 1, so I'm not going to put any points in here for this. Let's just say you got 4 points there. A little later on, you got on board for some of this long side. I hope you weren't trying to go short like I found myself doing. It's an Achilles heel for traders to be contrarian. And again, I just was not on my game. And I wasn't trading my plan, which, you know, is why I'm doing these videos, because these check marks, and, you know, it helps you have faith in yourself and also your understanding, and wait for things to play out. So this was working, and you know, my directive to myself was to buy weakness. I wasn't doing that, and then I realized I'm kind of twisted up here. So let's see how many. First of all, if you started buying, you were, you know, closing here a little slow on. Well, let's do it like I wrote it first of all, okay, and then we'll scale it back to something more realistic. So let's say you got in. Sorry, why isn't this not moving? You got in above the value area high. You bought here, took a little heat, and your stop was somewhere below the 50 moving average. So I'm doing this backwards. 3-point stop. Okay, that's reasonable. Oh, you might have felt like, oh, got a little fortunate there. They didn't come through there and just kind of, you know, they do a lot of back and forth through areas that are visible to people. And you took it up to the settlement. Okay, well, that's almost 6 points. You took out the prior high day, there's 10 points. But let's say you were a very patient genius, and you took it all the way up to the R1. It's 30.75 points, so 30 points. All right, let's scale it back here. Let's say out of this move, you had a couple winners and a couple losers, and you netted 6 points. Now let's make it even better. Whoops. It wasn't the best day with all that potential. You got 4 points. How about that? Total for the day, 8 points. It's just one day, one morning. All right, not terrible. I think your mother would be proud of you. Anyway, when we move back down, broke one-time framing. Okay, I'm back to this now, where we rolled back over. Now we start one-time framing to the downside. We come back into the prior high a day. At this point, people maybe want, well, they're just going for the D low, and I should buy the IB high. A lot of people think that way. Buy it to settle. Okay, sure, maybe. But when you come back in, and you've got this, now you got a real elongate, this is really, I don't remember how it came down, but that's an elongated range of that TPO. So kind of indicates some long liquidation here. And one clue that short-term time framers were in control was the fact that we stopped at very visual references all the time. Okay. Another thing that I think a lot of people don't think about, excuse me. Hey, I don't know what a lot of people think about. I just never hear anybody talk about it. This is a normal variation day. Now I'm going to take these risk-reward tool things off. Okay. I'm going to hide my studies just to make this real clear. And we can get rid of the 50 moving average. You see this blue line? That's your initial balance. That's A and B period. Now, if I was to take, there's another way to do this, but if I was to take this line and just make a vertical line to measure that, and then I take this line and I move it to the top and I put it on top here, that's 100% extension of the initial balance, right? What level would you say this is? 90? Maybe 90 is up here. 80? 85? Well, that's a normal variation day. And there was a very visible reference, a short-term day time frame reference. I mean, obviously anybody can see it, no matter who they are. But this is a very R1 was up here. Remember, right here. Went through it like the proverbial stop run. Because maybe people shorting here, shorting into it, were putting their stop up here. Believe me, I've been that guy before, and taking a shot, feeling all like a lucky cowboy. You're gonna be the guy to catch that short, and sometimes you do, and then you keep doing it. So anyway, 85%. Well, that's a indication that daytime framers are in control. Until we get past this, this means that there's not a large net influence of other time frame. Okay, that's what that means. It looks like it is, but it doesn't mean they're inactive. It just means that's this is typically going to be not as big an influence, more influence than a normal day, but not as much as a trend day, right? Anyway, it would have been nice to have a reversal pattern here. That would have been an even better indication. But there may have been other patterns on smaller time frames in here. But it started to roll down, but this clue would have helped you when you got back down here. You see? So even though you may not have shorted up here, or you may have thought, well, we're just going to have we're going to have some profit taking that's going to resume. We're going to that 100 moving average, or we've got all that short covering above from that day way back. I think it was in September where it was a strong down day. I pointed out on the regular trading hours. Let me just whip that in here real quick. Right here, okay? So, but once you got it back inside the prior high day or below settlement again, it's like, okay, what's going on? We're back in the middle of range. Maybe I should be looking to short this because what do we talk about? We've got conflicting data points. We've got, we already took out this week high. Game over. Hit the R1. Game over. Well, we got a poor low, at least on the 23rd, and we got weak lows in the open for this day. Got a weak low. We never took out the overnight low. Poor low or not, we didn't take out the overnight low. And then we had a weak low down here, and we had a poor low down here. Here's the reasons that maybe things are rolling over. Now, you also would probably see Delta or market internals or something kind of coming off a little bit. I don't know. I wasn't really watching Delta. I actually started moving things into this chart book, which I use normally for preparation, and I'm not looking at my thing that has Delta on it right now. Anyway, that being said, so there you go. It's the trade review, but also some insight into how to think about the market as the days happen. So I put this in the wrong place. So yeah, these were pretty decent plans for 8 points. You could call it 9 if you wanted to. Anyway, there you go. Make a great day, and hopefully y'all have a plan for today as well. Thank you very much.